Maybe the U.S. government is now coming down on Apple with that hammer and gavel that is putting so much fear in the likes of even Warren Buffett. The diamond-handing institutional funds like Berkshire have started selling Apple. This is what really suppresses the stock when 56% of the outstanding shares are held by institutions. Is this fear warranted, or is this opening up a potential buying opportunity? As I share data with you that really kind of presents this idea that we haven't reached parity with the global market. There's still huge expansion capabilities, and personally though, I don't think Apple is the most valued company. Every time it's dipped in the past, it has always proven to be have been a buying opportunity. I think there's better value in companies like Google, but you can't help but recognize that Apple still, I think, has a long runway ahead of it. As I share this data with you in this video, if it's something you'd appreciate, consider slapping that like button and subscribing if you're on a path to financial independence to perhaps one day retire early. But let me expand your mind first and foremost to understand the scale and scope of the internet as it is today, because right now over half, or 54% of the global population, some 4.3 billion people, now owns smartphones. So I mean, less than half the entire globe they don't have access to smartphones, which is just so insane to me that like the developing world is still this far behind when we've already reached parity with the entire Western world, right? And it's also incredible to think that about 5.35 billion people have access to the internet. So I mean, about 66.2%, about a little over one third, I think, of the entire globe does not have access to the internet. I mean, that is just so mind-boggling in 2024 that this is still something that is expanding to the rest of the world. And I think this data really kind of plays into something we're about to look at here. And I want you to really kind of take this into consideration because this data is fascinating. In the US, iPhones, they basically have about a 57.93% market share. As of 2023, Android had about a 70.29% global market share. And we're going to understand why that is in a moment. But iPhone users have about a 43.7% higher average salary than Android users, which is really interesting, as Gen Z and millennials are more likely to be iPhone users. 47% of former Android users say iPhone provides a better user experience. It's something I would have to agree with, even though I've used Android, I've used Macs, I've got a PC here as well. I use a lot of different tech, so I find it intriguing to see the little things that annoy you and don't annoy you. But personally, I think if you like Android, you like it. If you like iPhone, you like it. Whatever, right? But 29% of former iPhone users say Android is much more affordable, and I think that's the primary case because I do think iPhones are just generally more user-friendly. Now, iPhone versus Android market share, this is where things are fascinating to me because over time, Apple has still been able with iOS to continue to take more and more market share from Android, which is primarily owned by Google. It's great to own Google and Apple stock. You kind of get these two monopolies that work together. And I think it's going to be neat to see how this trends over time, but I think you're only going to see slight percentage changes because I really feel like there's always going to be Android users. There's always going to be iOS users. And this is probably a fair, depiction of what a product that's reached full parity with a market looks like. You're going to get these fluctuations, some ups and downs that may change incrementally over time. However, when you look at a global scale, there's something more interesting going on. We can see that Android reached full peak at what looks to be almost 75 to 80% during 2018, but has slowly been losing market share to iPhone ever since. Well, what would have caused this? And I think it has a lot to do with secondary markets, because as it stands, when you go to trade in your iPhone, Apple is refurbing that iPhone and then selling it to emerging markets, developing nations, and kind of offering them a much more affordable product. And I think Android was the affordable way to go when we're talking about operating systems, right? Because you'd be buying your Samsung. I don't even know if does Huawei operate off Android? It doesn't really matter. We know that the two dominated monopolies in the phone market outside of any other competitors is Android and iOS. But we can see that because iOS is becoming more and more affordable and because it's reaching more secondary markets, we can see that it's taking Android's market share. And I think iPhones come as a symbol of status. As we know, a lot of people that have money like buying the newest iPhones and showing them off. We do know that it has a more friendly user experience for the vast majority of people, so we can see why it's starting to take that share. And now Warren Buffett, and this puts a little bit of fear in my eyes because anytime Warren Buffett starts to sell stock, they tend to continue to sell stock at Berkshire. And I know they only liquidated about 1% of their Apple position, but the fact that it's worth $174 billion damn dollars, and this is just one institution, like you can make real waves, and you can really set the tone for other major hedge fund managers when the likes and one of the most major shareholders start to sell. And especially if we start seeing a continuation of selling, because again, this is something that Berkshire has been famed for, in my opinion. They start off a little bit of selling and people aren't too worried, and then they just keep selling until they fully liquidate the entirety of the position. Again, I don't think that's going to happen, but it's something you should be cognizant of. I mean, we can see that they're much more bullish on the oil sector as it stands today, with Chevron and Occidental making big waves in Japan. And we know they made some really famed purchases of some of the commodity trading companies there. And Japan has been on an absolute tear, outpacing the U.S. markets this year. I think the Japanese markets are up like 20%, and the U.S. markets are only up 10%. So we can see them trying to continue to diversifying their pie, considering the mass cash position they have that continues to balloon to all-time highs. Now, when it comes to Apple's stock, it is trading down about 7.57% as of year to date, and this is obviously a bit concerning. Trading at a 26 times multiple, more in line with where Google's currently trading, but I still think Google is a much more favorable value as we look at some of the growth metrics behind where Apple sits today on the financial side. But anytime in history Apple's dipped, it has always been a buying opportunity. I started accumulating shares, I think, somewhere around 2016, and I sold the vast majority of my shares to put it into index funds around 2017. I locked in a massive, insane gain, riding those shares up the way that I did. I think my yield on cost was like something like 5% for the dividend that now is only 0.56%. But I still think that looking at Apple today, like, I wouldn't have a problem buying it. I think there's some real potential here, and it's a company that when we get deeper into it, I think you're going to be, again, still blown away by the amount of cash flow that they're generating. Now, obviously, if you don't understand a price to earnings multiple, it's not nice seeing at 26 on a company that isn't growing revenue. Because that means so long as they can continue to grow cash flow, which again, I don't want to confuse you too much early on, but just presume that a price to earnings means that if nothing grows or drops as of today, it would take you 26 years to get a full rate of return out of the current cash flows. That's a lot. And that's really easy to kind of boil down to, because at a $2.6 trillion market cap, that means that they're generating over $100 billion in free cash flow, right? So we have to presume that cash flow is going to continue to grow. And obviously there's so much concern about that cash flow, and the Justice Department is suing Apple for the monopolizing of the smartphone market. Apple's broad-based exclusionary conduct makes it harder for Americans to switch smartphones, undermines innovation for apps, products, and services, and basically imposes extraordinary cost on developers, businesses, and consumers, because we know they're charging, if you make an app on iPhone, you're selling it through iPhone, they're charging 30%. I think they also charge when you're running ads and certain things through iPhone, that they're also taking a percentage. Google's already paying them an arm and a leg to be the primary default search browser, and Apple's not going to compete with them. And it also looks like Apple's going to partner with Google on their Gemini and their AI products. So I think that's going to be going on for years. I don't think we're going to hear the end of that anytime soon. And does it really concern me that much? No. I think most people, and especially Americans, they want companies like Apple to succeed. I think, Android has they also have a very large foothold on the market as well. It's just the fact that Apple, I think, makes a superior product, and they're starting to continue to take demand of, the further expansion of that market. When you make a great product, people keep buying it. I don't know if you can call it a monopoly at that point or what, but it could obviously hinder them if they lose some aspects of this and have to pay fines. I don't really know. This is going to be a huge defining factor. It's just not going to be for a while. But taking a look at currently Apple, we've talked about the slowing revenue growth here, total net sales year over year barely increasing. They're just starting to pull head above water here when it came to revenue, but they're making their earnings still look much better because their net income continues to grow. But that's primarily driven by the fact that they're squeezing margins, right? Every company right now that doesn't have revenue growth, they're squeezing margins anywhere they can by cutting costs, laying employees off, doing anything like that, right? So, and the other thing I don't like about Apple is their net assets. If we take a look at their 2023 end of year here, sitting on $353 billion in assets and about basically a total liability of $279 billion. Their balance sheet isn't as clean as some other companies like Google out there. In fact, I think Google has the cleanest and the highest amount of assets in comparable to Apple. But the difference is Apple's able to generate, again, crazy free cash flow, right? And I want to take a look at that real briefly because, firstly, as mentioned, there has been nominal to no revenue growth ever since the interest rate cycle took effect because nobody's replacing crazy expensive MacBooks and phones as time goes on. But when you take a look at, just take a look at our earnings per share here, because earnings per share is starting to go back up to all-time highs. They're doing a good job at squeezing what they can out of the current revenue that they have. And they're only going to be able to do that for so long. So you really want to pay attention to net income growth because this is what we need to start trickling to the upside. And I think once we get into an interest rate cut cycle, that's when Apple products will start becoming more and more relevant again, because it was like 2020, right? You saw this massive explosion after the pandemic. The government was handing out helicopter money, interest rates were low, people had no problem replacing new iPhone products and MacBooks. But then as soon as that that free helicopter money ended, so did Apple's growth. I mean, it's quite apparent that Apple's growth is highly dependent on how much money people have laying around. And we're going to get back to a nominal market where I think that'll continue to expand. And that's why I don't think Apple's growth is behind them yet. And I'm hoping they continue to dip into the future here, because we own Apple. Like, my fiance owns it. As mentioned, I'm buying tech companies she doesn't own that I think are more favorable today. But honestly, I'm looking at it here, and if it keeps dipping, I'll probably start picking up some shares, because I just can't help but see that as much as people hate VR, they're making fun of Apple for all this stuff and how far behind they are canceling their self-driving car, and they're losing competition everywhere. They don't need to keep expanding anywhere really, other than making sure that they make the best damn phone product, and they have AI as the next potential huge runway for them. So you can't help but think that the iPhone isn't going to be replaced by VR anytime soon. There's nothing that's going to take that market share. So in the time being, I'll probably end up accumulating some shares here at some point in the near term if this stays as suppressed as it is. I'm really hoping that institutions like Berkshire don't continue to sell shares, because that's what will really drive downward pressure. But I'd rather buy companies when they're on the downtrend than the uptrend. Though if you were buying Nvidia, congrats, because that was one uptrend that still continues to persist. But we'll see what happens. I'll pass the question off to you. I'd love to know what you think about Apple in that comment section below.